Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be comparing dividend income versus interest income and what you can be doing with your stock money or investment money for this calendar year. The dividend stock that I'm going to be looking at today is Bank of America, which trades under the ticker symbol BAC on the New York Stock Exchange. The reason why I am showcasing Bank of America is because this is a company that I have invested with for probably closing in on 10. Actually, this will be 10 years as of today that I have owned or traded Bank of America stock. It's one that's been in one of my long-term holdings for a very long period of time. At the time that I purchased it way back in 2014, it was due to the fact that they had a very attractive dividend at that point in time. So when we're talking about dividends, this is a percentage of the profits, or hopefully the profits, that the company is paying back to their investors. So I am currently on Schwab at this point in time, although most brokers are going to be able to show you this. But if you come down below, you're going to be able to see the dividends that the company is issuing. You can see that in 2023, the company went from that 22 cents a share dividend up to 24 cents a share dividend. Now, one of the things that I like about dividends quite a bit, and this is what I have been doing for my various holdings over the years, is that this is something that you can opt in depending on your account permissions, but you can do this on Robinhood, you can do this on Schwab, you can do this on Fidelity, but it's called the Dividend Reinvestment Program, also known as DRIP. And that means that you can take those dividends and purchase additional shares of stock. And one of the benefits of that is that you are not showing that dividend income in the calendar year, so there can be benefits from tax purposes. So one of the cool things about dividends, as you can see on the screen, is we've seen some pretty material increases over certain years of the dividend or the company increasing their dividend. Now, one of the things that I would note is this does not necessarily mean you're always going to see a massive increase in the annual dividend yield, which as of the stock price on January 2nd was about 2.83%. But what I would note is if you have that invested and it is continuously buying more stock, you're going to continue to get more dividends the more stock you own as this continues to pay more and more and more. So I really like this chart because it showcases, again, this is compounding income that you are creating. So if you've got 100 shares, you are going to be getting $25 in 2016, and those are going to continue to buy. But even if you just had your 100 shares, you would now be getting $92 a year as opposed to $25 a year. Now, I would point out that that does not necessarily reflect the growth or declines in the stock price over that time, but rather we're just looking at the overall investment. Because you can see that as of 2018, the stock price was essentially where it's at today. So despite the fact that we haven't seen any material stock price growth, you have been getting additional dividend income over that period of time. And you can see that increasing over time from 12 cents at one point in time, and that's the annual dividend, all the way up to now at 92 cents per share for the annual dividend. So the reason why I showcase this, and the reason I think that this is pretty awesome, is you can see that 10-year growth rate of those dividends increasing. You can see that we've got a number of averages available here for you to review. And so the question is, why wouldn't, if there are all of these dividend advantages, why wouldn't we be purchasing these stocks, these investments at this point in time when it appears that, hey, this is always going to be going up? And I did pick a company that has continued to perform quite well. But why wouldn't I pick this if I can lock in these returns? Again, $25 a year into $92 a year, or even if we multiply that out, or if you have 100,000 shares, and now I'm getting $25,000 a year versus $92,000 a year. Bank of America being one of, I believe, share count wise, it is Warren Buffett's largest holding. He's getting billions of dollars from them over the years. So the question is, why wouldn't we just do this? And while I am a big fan of dividend investments, I think that it is an awesome way to increase the value of your portfolio. At this point in time, or this calendar year, I would note that depending on what you expect that stock price to do, again, we're sitting around that $33.50 a share, is one of the other options you have is instead of choosing that 2.83% dividend, although that will compound, is you also have the capability to evaluate or pull in some of these fixed income options where you can get on a 1-year basis 5.11%. So one of the options that you have available to you is on my $100 that or my 100 shares, the equivalent of that, instead of that 2.93% or 2.86%, I can get 5.11% on the 1 year. And the advantage of this option for these CDs that you see here, although you can buy US Treasuries at 4.79, one of the advantages to the options that you see here is that you have the capability to have a risk-free investment on these cash accounts. So it's not going to go up by a lot, but it's also not going to go down by a lot, and you're able to lock in that passive income. So one of the options you have available this year is if you have a longer term investing horizon, if your focus is not on capital conservation, I think that there's a lot of value in looking at and evaluating dividend stocks, especially if you think that the stock price itself is undervalued. However, if I'm looking to maintain capital and to keep my cash available, maybe you're closer to retirement, then maybe some of these CD options or the bond options are going to be a safer option available for you. Now, I was looking at Bank of America. That is by no means the end all be all, but it is something that you do have the option to evaluate and to review different stocks that you can check out at this point in time. So in the comment section down below, please let me know what stocks you're looking at that are great dividend investments, or if you've started moving money over to different investment cash accounts that are going to be money markets, that are going to be CDs, or so on and so forth. So keep in mind that as I review all this, everyone is in a different place, and this is not to be construed as investment advice. This is just my opinion on a few different types of ways that you can leverage your cash this calendar year. So let me know your thoughts and feedback in the comment section down below. And if you made it this far, please leave a like and subscribe. Thanks. Talk to you later.